All right, what's up, y'all? Morgan, the CEO here. So I want to go through this chart. Um, the ticker is GOLD. That's gold. So Barrick Gold Corporation. This is a swing trade that I just got in last week, a couple days ago, and surprisingly, it actually closed at the price that I bought shares at last week. But I wanted to point out a few things in this chart of what I see and kind of give an explanation to some of this stuff. First things first, I want to show you all why I got into this trade. This ticker, right? I mean, not ticker. This candlestick right here is from July 2nd. I have the daily chart going on. So basically, each candlestick is its own day. So this June 10th, June 11th, June 14th. So the last day that's showing up on here is June 2nd because the 4th of July weekend and Monday was a holiday weekend. Holiday day. So it was no trading. So the reason I got into this is because when I saw this chart, for one, the first thing that I noticed was this right here. This is called a gap. The reason that some companies, well, some stocks gap, this is what you call a gap down because it gapped down as opposed to going up. But a lot of the times, companies, it'll drop like that, meaning that it skips over all of these prices here. So you see right here, this lower wick is at $22.42. And then it came here basically to $21.79. The highest of that day was like $21.89. So it basically skipped from $22.42 to $21.89. It did that in just a matter of a day. Now, the reason that gaps happen is because the security, which in this case is a stock, the price jumped between two periods, basically skipping over prices like I just said. So it creates this hole in the price chart. And the reason that I got into this is because usually what I've noticed is when there's a gap, eventually it's going to come back up and fill that gap. So that's why I got into this, because usually when I see gaps, I'm like, okay, cool. And especially if in this moment right here, it's doing this. Hold on, let me show you. I see a rectangle. Okay. So, boom, here we go. Now, I could probably guarantee you, well, not guarantee you, but it's probably going to go a little longer, trade sideways. That's what this is called. So it's trading sideways for a little bit, which means that it's consolidating. But eventually, I am predicting that it's going to go up, break this box, which the high has been about 21.37. Eventually, it's going to go up, 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 fill this gap here. And it's probably going to pull back a bit and then come up. I'm going to trade it until it gets to about here. I see that as a price target, and I also see right here as a price target. Now, the reason that I choose these as price targets is because the stock has already hit this before. So eventually, and I don't know how much time this is going to take. It can be a few days, it could be a few weeks, few months. That's why it's called a swing trade, because eventually it's going to make it up to this target and up to this target. And the reason I say that is because it's been there before. So you see it here, you see it here, you see it all over here. So basically it's hit that before. It's actually gone higher than that. Those targets that I've done is actually, if you wanted to, you can stay into this trade assuming that it can get up here. I personally wouldn't. Might take some time, or it may not. Gold might have some really, really good news, and then you can profit off of that. So imagine if you bought it down here when it cost $20, $20.79, and you sold it up here when it cost $31.22. I hope some of this is making sense. But back to what I'm talking about. So I got into this trade, and I'm going to hold on to it until it gets to my price target. And I'm charting on this platform called tradingview.com. So that's my target. Now, I may stay in it until it gets here. I guess it just depends on how the trade's going. I'm kind of like an in and out. So, if it's going to take months, I probably don't care that much to trade this one. But, it's all on you and your patience. So let's see. Okay. At about 2079. And my target is 2373. So I would be making about $2.94. Now, that's not a lot. But imagine, I guess, if you bought 100 shares. Or no, let's do 1,000. If you did 1,000 shares, that's looking at about $2,940, right? So if you bought 100, it's about $294. Excuse my math, I can't think at the moment. But if you bought 100 shares, then you would make a profit of $294. So you basically stand to gain about $2.94 per share if you get in at 2079 and you sell at 2373. Let me show you all something real quick about a stop loss. So a stop loss is where you would get out. So if this reverses on me, right? So right now it's in this box. I'm cool with this box. That's about 2029. I'm cool with it trading within this box. That's why I got that. But say if it drops about $20, honestly, I'm cool with that. So if it drops all the way down to $20, well, 2003, we'll just keep it at that, then I'm going to get out of this trade, which means I would just go ahead and take that loss and then move on. So I'm basically willing to risk if I got in at 2079, I really would do $20, but I'm willing to risk about 79 cents per share. So that's not a lot. So I would basically get out if it hits $20. So I hope that makes sense. So that's called a stop loss. That's what this is. So recap. So if I got in at $20.79 and it drops down to $20, then I am risking 79 cents. If it doesn't drop down and I got in at 2079 and it goes up to 2373, then I am making $2.94. So that's the difference. Now, if I buy 100 shares, then I would be gaining $294. That's pretty cool, right? If I were to stay in until 2537, then I would be gaining $4. Let me make sure I'm still on there. 2079. Boom. I will be gaining $4.58 per share profit. So that's really kind of on you as the trader in terms of the amount of patience that you have, and then all of the other analysis that you do with this stock chart. But for me, I got into this swing, and I'm definitely waiting to see what it's gonna do for next week when the market opens tomorrow. Because I got in, let me see, I think I got in on this day, June 29th. Yeah, I got in June 29th, and then it kind of went down some, and then it's finally back to 2079. So I'm waiting to see what's going to go on with this. But I definitely do believe it's going to fill this gap at some point. I'm thinking probably within maybe the next month. And then it's going to reach my target, and then I'm going to go ahead and sell. So that's that. Oh, and just to explain real quick why it probably did this gap, it probably got, gold probably got some bad news. That's usually what happens when stuff gaps down or gaps up. If it's bad news or bad earnings, it gaps down overnight. And if it's good news, good earnings, or, some type of partnership or something, then it'll gap up. That's not to say that it's always going to happen, but usually it works out that way. So anyways, this is my swing trade for the week, or probably for the next few weeks, but I will keep you all updated and show you this chart. I'm Morgan, the CEO. Peace.
For anybody winning on the low like me, putting in the effort trying to get it like me, with $1 million in the bag, all cash in the stash, I ain't never going back, I'ma make it increase.